Hey everyone, welcome to TQQQ Labs. Today, AMD surged 877% in a single session. Meta essentially wrote AMD a $60 billion check, a 5-year deal for 6 gigawatts of AI chips. That's a crack in NVIDIA's monopoly over the AI semiconductor market. And tomorrow after the close, NVIDIA itself reports earnings. Expected revenue, $65.7 billion. That's 67% growth year over year, the largest quarter in history. The day after AMD throws down the gauntlet, NVIDIA has to answer. Think the timing is a coincidence? If you're holding TQQQ, tomorrow could be the most important day of the month. Let's recap the last 2 sessions. Yesterday, Monday, the Dow plunged 821 points, a 1.66% wipeout in a single day. 2 fears collided at once. First, President Trump raised global tariffs to 15%. The Supreme Court had struck down existing tariffs as unconstitutional, but the White House pulled out Section 122, a different legal provision. The court locked the front door, so they came in through the back. These tariffs are temporary, 150 days, but they apply to $2 trillion in annual imports. According to the Yale Budget Lab, that's an average $1,500 tax increase per American household. The second fear was AI disruption. Anthropic announced that its AI tool, Claude Code, can modernize COBOL codebases. COBOL is a programming language from the 1960s, and 95% of U.S. ATM transactions still run on it. Until now, modernizing that code required months of work and hundreds of millions in consulting fees from firms like IBM. But AI can just do it? IBM crashed 13% in a single day, its worst session since 2000. The entire software sector panicked. Microsoft down 3%, CrowdStrike down 10%. Then today, Tuesday, the market flipped completely. Dow up 371 points, S&P 500 up 77%, Nasdaq up 17%, up 319%. The investors who panicked yesterday came rushing back today. Why? 2 reasons. First, the Meta AMD mega deal. Meta Platforms signed a 5-year AI chip supply agreement with AMD. The scale ranges from $60 billion to as high as $100 billion by some reports. They'll deploy 6 gigawatts of AMD Instinct GPUs, along with 6th-generation EPYC CPUs. But here's the most stunning part. Meta received warrants to acquire up to 10% of AMD, roughly 160 million shares. This isn't just a purchase order, it's a strategic investment. Just a week ago, Meta signed a massive chip deal with NVIDIA, and now they're making an equally large bet on AMD. Meta's message is clear: we will not depend on a single company for AI infrastructure. For AMD, this is a historic win. After years in NVIDIA's shadow in the AI chip market, AMD has been elevated to an official big tech partner. AMD up 877% in one day. The second reversal came from Anthropic itself. The same company that terrorized the software industry yesterday became its savior today. Anthropic hosted an enterprise agent event and announced new Claude Cowork partnerships, plugins integrating with Salesforce, DocuSign, FactSet, LegalZoom, Intuit, and Google Gmail. Anthropic CEO Dario Amodei and Salesforce CEO Mark Benioff took the stage together to unveil Claude for Agentforce 360. The message: AI doesn't replace software companies, it supercharges them. Yesterday's narrative was AI kills IBM. Today's narrative is AI empowers Salesforce. Salesforce up 5%, DocuSign up 5%, FactSet up 6%, and Thomson Reuters surged 12%, its best day since 2008. That's the core story from the last 2 sessions. The same technology was a destroyer on Monday and a partner on Tuesday. The AI narrative flipped 180 degrees in 24 hours. On Reddit's Wall Street Bets, the hottest tickers tonight were AMD and Meta. One user wrote, "Meta just wrote AMD a check. What are NVIDIA shareholders thinking? Probably fine for now, but the monopoly is over, right?" And there's more. Home Depot reported earnings. Q4 EPS of $2.72, crushing the Wall Street estimate of $2.54. Revenue of $38.2 billion, also above expectations. The first earnings beat in a year. The stock rose 3.5% in pre-market. But the real message was behind the numbers. CEO John Furner said, households earning under $50,000 a year are living paycheck to paycheck. Housing transactions are near historic lows, and 2026 guidance puts same-store sales growth at 0 to 2%. This is the temperature of the American consumer. The thermometer reads lukewarm. They beat earnings, but the future looks uneasy. Expectations were set so low that clearing the bar doesn't signal consumer strength. Now let's talk about NVIDIA. Tomorrow, Wednesday after the close, NVIDIA reports Q4 earnings. $4 trillion market cap, the beating heart of the AI era. Wall Street consensus, revenue of $65.7 billion, up 67% year over year, EPS of $3 up 72%. Polymarket puts the probability of an earnings surprise at 94.5%. But the numbers themselves aren't the issue. The market is already looking beyond the beat. 3 things to watch. First, the timeline for the next generation Vera Rubin architecture. Second, Q1 guidance. Wall Street expects $71 billion in revenue. Third, the integration strategy for Grok, acquired for $20 billion in December. If NVIDIA exceeds expectations on all 3, the Nasdaq takes off and TQQQ takes off at triple the speed. But if the guidance disappoints, Monday's nightmare could repeat. This is exactly where our strategy's philosophy comes in. We don't just hold TQQQ blindly. An algorithm reads the market regime. Right now we're in long phase. QQQ is above its 200-day moving average of 583.95. Currently, QQQ at 607.82 sits 4.09% above that line. It hasn't cleared the 100-day at 614.03, but as long as it's above the 200-day, the strategy stays long. This dual buffer structure is the key. Dropping below the 100-day doesn't trigger an immediate exit. The 200-day provides a second line of defense. Let me show you what this strategy means during a tariff war, using historical data. Past backtest results don't guarantee future performance, but they're worth examining. During the 2025 tariff war, January 20th through December 31st, buying and holding TQQQ returned plus 29.08%, with a max drawdown of minus 56.84%. Our strategy over the same period returned plus 50.48%, with a max drawdown of just minus 23.48%, nearly 1.7 times the return with less than half the drawdown. Every time tariff headlines rattled the market, the algorithm shifted regimes and played defense. The 2022 inflation bear market is even more dramatic. Buy and hold TQQ 79.68%, max drawdown 81.02%. $1 billion becomes $200 million. Our strategy 35.9%, max drawdown 38.5%. Again, these are historical results, not a guarantee of future returns. But they show just how different leverage with a system is from leverage without one. Let's check the fear and greed index. 43, still in the fear zone, up 5 points from yesterday's 38, but firmly in fear territory. The VIX dropped 7.33% to 1947. Volatility is draining out, but year-to-date the VIX is still up 34.18%. Volatility has been structurally elevated all year, and these daily swings are happening on top of that elevated baseline. Between fear and greed, the market still hasn't made up its mind. Quick note on gold. GLD dropped 139% today, a one-day dip, but on the month it's up 11%, and year-to-date it's up 19.16%. Gold has dominated nearly every asset class this year. Tariff uncertainty and geopolitical risk keep driving safe haven demand. Here's the interesting part. Gold dropped on the same day stocks rallied. Classic risk-on, risk-off seesaw. Investors pulled money out of safe havens and rotated into risk assets. Back to individual names, Microsoft up 18%, partially recovering yesterday's 3% hit, but year-to-date it's down a shocking 17.56%. A core Nasdaq 100 name down nearly 18% this year. The market is punishing the gap between AI investment and AI monetization. Apple up 2.24%, barely holding on to a positive 0.51% year-to-date. Amazon up 1.6% but down 7.92% for the year. Google down 0.19%, year-to-date minus 1.35%. Meta up 32%, year-to-date now 1.71%. Tesla up 2.39%, but year-to-date 6.55%. Among big tech, Apple is essentially the only name in the green this year. The rest are all in the red. That's the reality of February 2026. One more from Semiconductors. Keysight Technologies surged 23% in a single day on an earnings surprise. When a semiconductor equipment company beats expectations like that, it's physical evidence that AI infrastructure spending is actually being deployed. These kinds of moves are the bricks that build the floor under the Nasdaq. Now let's open the real portfolio. The $10,000 TQQQ experiment. Current total $10,143.35. Return plus 1.4%. Holding 199 shares of TQQ at an average cost of $51.33. Today's close $49.78. Still below our average cost basis. February has been rough. TQQQ is down 9.66% for the month. Tariffs, AI disruption, and macro uncertainty piled on, shaking the Nasdaq, and triple leverage amplified every hit. But the strategy remains in long phase, because we're above the 200-day. The algorithm is saying this isn't danger territory yet. If QQQ drops below the 200-day at 583.95, the strategy automatically shifts to defense mode. Until then, we hold, not emotion. The system decides. Making $143 on $10,000 might not sound exciting, but this is the first month of a 10-year story. You don't judge a marathon runner's finishing time at the 100-meter mark. In past backtests, $10,000 run through this same strategy over 10 years turned into 110 times that amount. Of course, past performance doesn't guarantee future results. But to prove why the system exists, why an algorithm replaces emotion, we put real money on the line, and we share the results every single day with nothing hidden. That's this channel's promise. Here's your checklist for tomorrow. 1. NVIDIA earnings, reporting after the close on Wednesday, beating $65.7 billion in revenue is the baseline. The real battleground is Q1 guidance and the Vera Rubin roadmap. A strong report could send TQQQ gapping up 5% or more at Thursday's open. A disappointing guide could resurrect Monday's fear. 2. Tariff fallout. The 15% global tariff is supposedly temporary at 150 days, but the market has already priced in a premium. Every new tariff headline will spike volatility. 3. The software sector's direction. Whether today's rebound was a real bottom or a dead cat bounce will be determined over the next 2 to 3 days. As one market analyst put it, Confirming a bottom is a process, not an event. The real turn begins when the last weak hands let go. Let me sum up the last 2 sessions in one sentence. The same technology went from destroyer to partner in 24 hours. AI crashed IBM 13% on Monday. AI lifted Salesforce 5% on Tuesday. That's the market we're living in right now. It's not the technology itself. It's whose side the technology is on that moves stock prices. And tomorrow after the close, NVIDIA places the final puzzle piece, a $65.7 billion answer sheet. If you're holding TQQQ, are you ready for what could be the biggest move of the month? We do this analysis every day. 23 data tools dissecting the market. An algorithm's judgment reflected in a real portfolio. Results shared openly, nothing hidden. If you want to see where this experiment goes, hit subscribe and I'll see you tomorrow. This has been TQQ Labs.